Okay, hello, hello, hello. Thank you very much, Andrea. Welcome, everyone. Really excited here to be here with Andrea tonight. I work with a lot of real estate agents. A lot of the real estate agents, like Andrea, are expanding their business models into real estate investments, which I think is just makes so much sense simply because real estate agents are the real estate experts. They have access to a lot of real estate deals. Myself, I'm an accountant, but I'm also a money manager, and we want access to these real estate deals for our clients and for Andrea's clients. And it's just a good marriage as far as managing money and having access to real estate deals. So we rely on people like Andrea to bring the real estate deals forward. And then I get involved. I'm here too to really, I manage money. I'm a public accountant, so we really believe in saving taxes. But I'm also here to share um, the problems that I see in the investment industry. People want access to real estate investments, and they don't get it. They don't get that from traditional investment management sources. And that's a big problem. And I'm going to explain why that is. And I'm here to hopefully provide a solution to those that feel the same. So, in our money management firm, we're strong believers that real estate should be a big part of your portfolio. I don't even have a problem with it being all of your portfolio. So, you can say diversification, but I have no problem with people putting all their money into real estate related investments, which is a pretty wide umbrella of opportunities. And it really boils down to, honestly, I've never found anything better than good real estate to protect your capital. And when we manage money, that's our job. We have to, number one, protect capital. Number two, get a rate of return. So as I made my way through the investment world, I was always surprised why there wasn't more real estate opportunities available to people. And finally, having spent enough time in the industry, I found out why, and I'm going to share that with you tonight. But I guess I should tell you a little bit about myself. So again, I am a chartered professional accountant. I'm a certified financial planner. I've been a longtime real estate investor. Uh, I worked at Deloitte Touche, chartered accountants in their tax department for 10 years, left Deloitte Touche, set up my own tax practice. And then I added money management, investment management, financial planning, estate planning to my tax practice, which made a lot of sense because right now there's really one of the other problems I see in the whole industry here is the lack of integration with your investment world and your tax world. And being an accountant and a money manager, investment manager, there is so much integration. There's so much that integrates with your tax life and your investment life. I've met so many clients that are very, very happy with the accountants they're using to do their taxes, and they're very, very happy with the people that are investing their money. Yet, because there's no integration, because those people don't talk, they don't work together, there is so many mistakes and areas of concern in their structures. So it makes a lot of sense to integrate your tax life with your investment life. So that's certainly one thing we advocate for, and we find the clients are better served by doing that. Um, what else? So now we always like to think about, where do you get your financial information? And this is going to lead me to talk about the problem that is in the investment industry, which is where you get your financial and investment information. So you do your own research. People, you're going on the internet, newspapers, publications, you talk to friends, what are they invested in? You attend seminars like this to get more information. Um, but you also get your advice from financial planners and investment advisors. And that is both good and bad. And I'm going to explain that to you. Uh, when we talk to investment advisors, we have a licensed marketplace. So 99% of the advice you get is coming from a licensed investment advisor. Okay. And with all due respect to that industry, they just want to sell you products that they're licensed to sell. And I don't know how else to say it. That's what happens in the licensed investment world. So that's a problem, a big problem, a problem that most people don't even realize that they have. So we're going to talk about that, which is then going to lead us to, where we get our real estate investment opportunities. So anytime people want to invest money, basically you want investment products, IPs, I call them. Okay, anybody who comes to me and says, Jerry, invest my money. Okay, well, what do you want to invest in? We're going to invest in different types of investment products. So real estate investments are investment products. Mutual funds are investment products. Stocks and bonds are investment products. Everything is an investment product. You owning your own rental property, that's an investment product. You having your own brokerage account, that's an investment product. So where do you get these investment products? Again, either you get them yourself by owning your own rental property, having your own brokerage account, or you get information about investment products from licensed advisors and unlicensed advisors. Okay, we in the money management world, we can choose to do our business either as a licensed advisor and an unlicensed advisor. And I'm going to explain to you why I went from being licensed to unlicensed, and that's going to kind of indicate what the problems are. When you have a license, so these are the licenses that people have, and in our investment industry is governed provincially, not nationally. Okay, so we're governed by Ontario, and we're governed by two main entities, Ontario Securities Commissions and Financial Service Regulatory Authority. There's your 5 licenses that anybody can have. Anybody wants to go into the investment world, financial services world, and there are your 5 licenses. If you have an MFDA license, the IPs, the investment products that you're licensed to sell, are mutual funds. If you have an IROC license, the IPs, the investment products that you're licensed to sell, is stocks and bonds. If you hold an EMD, which is an exempt market license, the IPs that you can sell are private equity. So those really are the IPs. Mortgages and insurance is more financial services, but if you have a mortgage license, you're allowed to sell MICs, mortgage investment corps. If you have an insurance license, you're allowed to sell segregated funds as IPs. Now, I keep using the word sell, and I hate the word sell. Okay, we shouldn't be selling investment products. We should be educating people about everything that's out there. We should be talking to them about, giving them the right information and letting people decide themselves. Now, the one thing you'll notice with these 5 licenses is there's no real estate. So people who want to buy real estate or invest in real estate, there's nothing here. Okay, MFDA, that's mutual funds. You're in the stock market. IROC, stocks and bonds, you're in the stock market, the publicly traded stock market. Exempt market dealers, you're in private equity. Okay, with mortgages, sure. MICs, that's mortgage investment corps. That's where you would put your money in, pool it with everybody else, and they would lend that money out in mortgages. You're, I guess, investing in real estate there, but you're really more of a lender. Segregated funds are just mutual funds with an insurance policy attached to it. So there's really no real estate opportunities here with these 5 licenses. And this is where 99% of the people get their investment advice from. Okay, so there's a problem. So 99% of the investment advice that people are getting do not have real estate related investment opportunities. And that's a real problem. And I know this from the inside out, okay? I've held all of these licenses at different times in my career. And once the aha moment came and I figured out, well, this is not how you should properly manage money. Another big problem, a real big problem, when anybody holds these licenses, again, remember 99% of the people get their investment advice from somebody holding one of these licenses. When you hold one of these licenses, you cannot put your client's best interest first. Okay, that drove me nuts. Okay, when you hold one of these licenses, your fiduciary responsibility is to the company that licenses you, which means you have to basically, the company owns you. You have to sell what they're telling you to sell. They've licensed you. And there's the problem. Okay. The reason why you don't see any real estate here is because these licenses are governed by both the Ontario Securities Commissions and the Financial Service Regulatory Authority. And who controls them? Who sits on their board of directors? All the banks. Okay. The banks want you in mutual funds. The banks want you in stocks and bonds. The banks do not want you in real estate. And there's the big problem. Okay. So how do you solve this problem? How do people, people who want real estate want access to different real estate opportunities? Many different kinds, owning your own rental properties, joint ventures, limited partnerships, fix and flips, assignments, private lending, multi-unit apartment buildings, mortgages in RSPs, the BRRRR method, developments, REITs, pre-construction. These are all real estate related investment opportunities that people want at least to learn about and possibly have access to. So back when I was holding these different licenses, I realized, that there's, how do you offer people real estate? And the only way to really do it is to give up these licenses, which I did. And then I wanted to create a company, a real estate investment company, which I did, called Canadian Investment Services. And that's how you can then offer clients real estate related investment opportunities. So in my company, I gave up all my licenses. I can still access those marketplaces through licensed advisors, which I can do if clients want it. But most of my clients, I like working with people like Andrea because she brings these real estate investment opportunities to the table. So it's a good marriage as far as me providing money management services and then working with people like Andrea so they can bring the real estate deals in and we can discuss them with clients. And that gives clients an opportunity to at least learn about this stuff. Again, we're very big. We hate the word sell. We like giving people information, education in an unbiased manner, just giving them the goods. And most people are wise enough to realize whether that's a type of investment that you want to be invested in. Um, Lots of people now are going down to the States to invest. I know Andrea has an opportunity that she'll share with us about some opportunities in the States. Um, so maybe that might be a good time. Andrea, you want to talk maybe about your
Yes.
opportunity in the States, and then I can jump back in.
Yeah. Thanks, Jerry. Yeah. So if you can just go back a slide, I'd like to just quickly touch upon the earlier slide there, just one slide back. Yeah. So looking at all of these opportunities, you have, because I work with investors all the time, and every investor is different. There are some who want to work with smaller units, say, for example, duplexes, triplexes. Then we have the bigger asset class, which is your multifamily, self-storage units, even mobile home parks. These things are now becoming more interesting to investors, and those who want to get into more savvy investors that want to get into bigger deals. So there are two ways to go around it. One is for you to actually be the investor that brings the deal to, let's say, your money partners, or you could be on the other side and be the money partner in a deal. So the you can either do a JV partnership, you can be LP or GP. LP is your limited partner, or a GP, which is your general partner. And these are just different ways to go about, structuring different deals that you'd like to do. It depends on how active you want to be in that particular situation with that deal, and what it is that's working for you best, where you feel more comfortable as an investor. Now, let's say we take Kitchener, for example. I would say, depending on the market we're in, fix and flips would make sense at a certain point in time. Of course, with the interest rates going up, doing fix and flips became a little more tricky, because then you had to make sure that your carrying costs were manageable and you could still sell at a profit. So, which became very, very difficult in the past, let's say 18 to 24 months since the interest rates, all of that change happened. So, Assignments, I'll leave that to Jerry to explain a little bit about that later. Direct private lending, again, that's on more on the passive side. So you are just the investor handing over your funds. With the word of caution here, we've all been seeing the news out there. Promissory notes are a definite no. So if you have anyone approaching you saying, on the basis of a promissory note, why don't you invest in our deal? Jerry would also vet this and agree to this, and it's an unsecured loan. So basically, you don't want to be getting into a transaction where you have that kind of a situation that could lead to problems later for you should the deal go sideways. So just be aware of that. Multifamilies become very popular, and again, it's about finding the deals that are cash flowing, making sure that if you have tenants in that building, especially in provinces like Ontario, where the government is more tenant friendly, you have to make sure that your numbers make sense before you jump into a deal that could probably end up, costing you thousands of dollars down the road. So just kind of to touch upon those strategies. And yes, talking about the deal that we now are currently raising capital, Jerry, if you want to just hop onto the next slide there. Yeah. So currently in Texas, in Dallas, Fort Worth, there's a 288 unit multifamily. I'm giving a very high level view of this particular deal right now. If you're interested, feel free to reach out after this call and we can talk some more about it and I could take you through all of the details. But this is with a US operator that we have checked, that we have worked with. We have watched their track record and we are involved with this deal now because we like what we see. I have actually traveled to Dallas last month to be the boots on the ground and see this project for myself as well. So this is a B class asset in an A class submarket, which is where we'd like to be. And because it's Dallas Fort Worth, the employers, the large employers, you don't have to worry about it being just dependent on one employer in that city. And the play basically is value add opportunity to increase rent and force appreciation. So it is all about the exterior facelifts, renovating within the units as well, and upgrading the amenities. So the tenants are happy at the end of the day, and they are willing to live there. They're willing to pay that amount of rent, that additional rent, to live in a class that a class unit compared to what else is available in that marketplace. And as far as exit strategies go, the refinance is within 1 to 3 years. Disposition of asset would be within 2 to 5 years, depending, of course, on market conditions. So the total project cost is about $55 million, but the minimum investment that we're asking for capital raise is in the range of 50,000 US. So that's just to give you a broad idea of the kind of deals that we're raising capital for. And again, like I said, if you want more information, feel free to reach out and we can have an in-depth conversation about this. So yeah, so back to you, Jerry. Thank you.
Awesome. Okay, awesome. Thank you very much. So, as you can see, Andrea is a wealth of knowledge. And again, these are just things we're not saying this is what you should invest in. We are just saying these are opportunities that are out there that you might want to consider. Because again, I'm being critical of the investment industry. Most people have just literally had mutual funds and stocks rammed down their throat as far as the investment products that they invest in. There is so much more. Again, all these different real estate opportunities. And yeah, a lot of people are starting to go south as our Canadian marketplace is getting a little concerning. The interest rates, there seems to be a lot of opportunities down south. Now, I myself, I don't really do a lot down south, and that's why I rely on people like Andrea to source those deals. And then, we look at them and we try to give people the information they need in order to invest. But the cost, the state seems to be a very lucrative place now for a lot of money to go that would otherwise be in Canada. And it also depends really, you have to decide too, if you're looking at real estate, you're gonna decide whether you want to be an active investor or a passive investor. And the difference is an active investor would be somebody that would invest in a joint venture that Andrea is bringing to the table. We're active, we're involved in those things. and it's kind of exciting. I've been involved in a lot of these type of things myself. It's kind of exciting to be involved and see the project unfold and just be involved from the ground up. So that's more of what we call an active real estate investor. A passive real estate investor really simply puts their money in REITs, real estate income trusts, okay, which are fantastic real estate opportunities. A real estate income trust is simply a fund of apartment buildings. Okay, Centurion REIT, Poulis REIT, Avenue Living REIT, Pier 4 REIT. There's a lot of these real estate income trusts out there, and they just create a fund through a limited partnership. They own all these buildings. They're easy to understand, those investments. Most all of us understand a rental unit. We collect rent, we pay the expenses, and there's net rent left over. That's what happens in a REIT. They've got all these buildings, they collect all the rent, they pay the bills, they take their management fee, whatever is left over is distributed to the investors in the way of a distribution. So REITs will get you 8 to 12% every year, none of this up and down in the market, very consistent returns. So that's one reason why a lot of investors, certainly passive investors, would choose to invest in these REITs. One thing I learned when I did have all these licenses and was pretty active in the stock market, the message was so consistent. They said, Jerry, just make me 10% without all the ups and downs of the market. And it's incredible what happened. And REITs is really what I found to provide that for people. And it's incredible what happens to your money. It's compounding regularly every year. So when you make 10%, you lose 20%, you make 15, you lose 8, you're up 7. That stuff that really beats up your portfolio much more than a consistent level 10% rate of return. And that's what you get with these REITs. So if you're a passive investor, that's a fantastic opportunity for you. If you're an active investor, then you get more involved in these joint ventures, and they are exciting. And they're again, we try to just explain to people that these are opportunities for you. You have to look in the mirror and see what kind of investor that you want to be. So that's the type of things that we do. Once again, we have these 5 licenses, which again, sorry to be so critical, but these things really impede access for many people to the investment products that they want, which again are all these real estate things. So again, this is the way I've set up my company. So Canadian Investment Services is my company. We have access to these 5 licenses. Okay, we have to access because we don't have a license. Think of an investment license very simply as simply having the ability to process an order. It's as simple as that. If you have an MFDA license, you can process an order for mutual funds. If you have an IRAC license, you can process orders for stocks and bonds. If you have a EMD license, you can process orders for more private equity. If you have a mortgage license, you can help people get mortgages, plus you can also promote mix. Same with insurance. If you have an insurance license, you can provide insurance for people. So that's if you have a license. I choose not to have a license, so I can do all this stuff, so I can do all the real estate stuff. So I can access all these products if my clients want. If my clients want MFDA-related products, IROC, exempt market, mortgage, insurance, I just deal with a licensed person to process the order. Okay, so in my opinion, this is the best way that I can possibly provide investment management for people because we have access to everything. Okay, in simple terms, over here, on the licensed side, you're more in the stock market. Okay, you're in the public stock market. Over here, on the real estate side, you're in real estate. Okay, so in simple terms, you're either in the stock market or in the real estate, and that's where most people sit. And one thing we have added in the middle, because people are either in the stock market or they're in real estate, in the middle, we've also become a gold and silver dealer, okay, because there's been a lot of demand for gold and silver. So I always wanted to create this company that can really offer clients whatever they want. So there was a large demand for gold and silver. So kind of in the middle here, we also offer gold and silver for people. We only do bullion, which means we can basically have it delivered right to your house, or we store it with Brinks. We have a contract with Silver Gold Bull, which is the largest originator of metals in Canada. And then we have a contract with Brinks for storing it. So we cover all the angles here. So if clients want this stuff that requires licenses, we can deal with it. If they want to do the real estate stuff, we affiliate with people like Andrea, who brings us these deals, and one-stop shopping for our clients. And again, we really take the position that we don't sell nothing. We have access to all these IPs, these investment products. So that to me is a much better approach. We do a lot of other services at Canadian Investments. Again, we have access to all of the investment products that you need. We need investment products to put into our retirement plans, our financial plans. We do financial planning as part of our business model. And then when we talk about financial planning, retirement planning, estate planning, financial planning is more for today. Retirement planning is more for tomorrow, when you become retirement years. And estate planning is more ensuring that what we're doing today and tomorrow leads to the, we have intergenerational transfer of assets. We need to make sure that is done in the most tax efficient way. So we use a program we've created internally, Financial Vision, and we use that with clients on an ongoing basis. So, again, we have to put the IPs, the investment products, into the financial planner. So we have most of our clients have real estate, so we put their various real estate investments into this financial planner, and it literally shows you your financial life on a computer screen, where you are today, where you are up to age 80, 90, and 100. And it's an ongoing process. So we work with clients on an ongoing basis. We'll set it up originally every time we pick up the financial vision again. We put in real values, which makes the information moving forward much more accurate. So it's a very powerful tool that we use once we figure out what kind of IPs the client wants in their financial planning. I've created a tax module on this financial vision. Again, we've created this software internally. That's very important, this tax module, because in our world, we have to make sure that the intergenerational transfer of assets is done in the most tax effective way. And with this financial planner, we put in all the information, we make assumptions, and then I can click my tax module and it'll tell you how much tax you're paying when you're 85 or 90, when your time is up on this earth. And that's a very, very powerful tool because we can do so much stuff to minimize that tax. Okay. And so I think it's extremely important. I mean, I've never yet had somebody answer my question when I say, how much tax are you going to pay when you die? Who knows? Who cares? Well, you got to plan for that. And again, I'm somebody I've done over 500 final death tax returns. And one of the problems is, of those over 500, more than half of them, we have sent half of the money in the estate to CRA. That is just mind-boggling, okay? And the reason why that is such a startling comment is because there wasn't enough planning. And this is the problem, the integration of tax and investments, okay? 99% of the people have been just getting investments sold to them by these people who hold investment license. And the biggest culprits are the banks. You go to a bank and get investment advice, guess what? You're in the bank mutual funds, you're in the bank stocks. They don't care what happens on your final tax return. Nobody with these investment licenses care what happens on your final tax return. They just want to sell investment products because their fiduciary responsibility is to the company that licenses them. It's a horrible system. And as a result, people like me do all these final tax returns and we see all these missed opportunities to save tax. So this is very big, the integration of tax and investments. And that's what you get when you deal with somebody like me on the money management side, and you deal with somebody like Andrea if you want real estate investment opportunities. We integrate, we work together, we talk. That doesn't happen with other people. RSP meltdowns. Okay. Again, I've done all these final tax returns, and one of the biggest reasons for all this tax that we pay on death is RSPs. Okay. And think of where all the messaging is coming from: RSPs, from the banks. They have massive, massive, massive marketing budgets. So all you're hearing in January and February, it's RSP season. You got to put money into your RSP. And that's the biggest culprit, the biggest problem at the end of your life are these RSPs. I don't like RSPs should not be, don't even think of an RSP as an investment. Okay. An RSP is a tax strategy, period. That's it. Okay. And what I mean by that is, again, an RSP is not an investment. An RSP is a vehicle, a bag, a thing that you hold investment products in. You put IPs into your RSP. Okay. So an RSP itself is not an investment. So don't think of it as an investment. It's a tax strategy. Okay. Personally, you have four tax brackets: 20%, 30%, 40%, and 50%. So your first $50,000 is taxed at 20%. Your next 50 is taxed at 30%. Your next 50 is taxed at 40%. And your next 50 is taxed at 50. And then it goes above high right up to 54%. Understand that. So when I say an RSP is a tax strategy, what I mean is when you put money into the RSP, you're going to get a tax break. When you take money out of the RSP, you have to pay tax. Very simple. What's the tax break you get when you go in? If you're under 50,000, you're going to get a 20% tax break. What's the tax that you have to pay on the way out? If it's more than the tax break you're getting, it makes no sense, 0 cents. So, and then the other problem is we never know when we're getting the money out of the RSP. We don't know when our day is up. We don't know if tomorrow's our last day. So we never know when our last day is. So we're building up all these RSPs and we're creating such problems. I met with a new client this week. They had 2.5 million in their RSP. And I said, man, you have got one big problem. Okay. And all they did was follow the bank's advice. The bank doesn't care what happens to you on your final tax return. So in my world, I'll let my clients put money into an RSP if they're making 50, if they're going to get a 50% tax break, if they're going to get a 40% tax break. Yeah, I'm okay with that. 30%, I don't know about that. 20%, absolutely not. Not letting any of my clients put money into an RSP at 20%. And if they put money into an RSP, we are going to strategize right away to get that money out in a 20% bracket, okay, as soon as we can. And once again, I go back to that is all about integrating tax and investments. That's just another example of integrating. And there's so many of these examples. I don't have time tonight to talk about all the different topics of integrating tax and investments, but there's a lot, okay? For those of you that can use corporations, we have a lot of benefits with corporations. I'll talk about that in a sec. I also want to highlight this be your banker, be your own banker thing that's getting a lot of attention lately. I'm not much of an insurance guy. My philosophy was always, sure, if you're a parent with young kids, yes, you should probably get some insurance in case somebody got hit by the bus. Plus, you're young enough when you have young kids, the insurance probably isn't costing that much. You can just get what's called a term policy. But once the kids are on their own 2 feet, do you really need an insurance policy? And I was always a person that goes, well, no, I don't need an insurance policy. My kids are on their own 2 feet. If I got hit by the bus tomorrow, there's some assets there for them. I'm not going to keep paying this insurance policy. So I was really pretty negative toward insurance policies. And then all of a sudden you start getting into the investment world and financial planning and retirement planning. You start doing all these final death tax returns, and you're going, wow, these people have a lot of tax liability at the end of their life. So then you start to introduce, you go, when we do these financial planning modules with clients, and here you are today, we make assumptions, money going in, money going out. Here you are at age 85, 90, and we hit that tax module, and it says, oh, wow, if everything goes the way we're expecting it to go, you owe $2 million in tax. And then we go, what do we do about that? And there's one of two things we can do. One is nothing. We just realize, okay, well, the more successful we are in our life, the more we're going to pay at the end of our life. Um, so that's one thing, is to do nothing. Just realize CRA will take way more of their assets than they should. And the only other option you have is to buy an insurance policy to deal with the tax. Okay, so here I am, somebody that's not really an insurance, I'm not the biggest fan of insurance. Then you get into this business and realize, man, we got to protect these people from paying half of their estate into the CRA. Well, one way is just proper tax planning, so that solves a good chunk of the problem. The other is, should we have an insurance policy to cover our tax liability? And it never really, the one thing I don't mind is, you can do these infinite banking policies, these beer bankers, in simple terms. I'm sure people have heard of this. I don't know if you fully understand them. They work great in corporations, where a corporation can own the insurance policy, and as you create cash surrender value in this policy, you borrow against it. Okay, it's a little tricky concept, but if you compare it to a house, okay, the be your own banker, think of that insurance policy as your house. Okay, it grows up in value, and you can leverage. You borrow, put a line of credit against your house. You can borrow money against that house. That's the same thing with these be your own banker things. It doesn't work for everybody. Okay, be careful, because these type of things are being sold by insurance people. And once again, that's one of the five licenses, and they're just there to sell you a product. Okay. I don't think they care as much as they should whether that's a product you actually need or want or can afford. They just want to sell. So we are a very safe source to discuss these type of things, because we don't sell. We just give information. We give you education. We want you to be part of that decision-making process, whether you want an RSP, whether you want be your banker concept. So that's very important to us. So we've become a very safe spot to discuss these things. The be your own banker, it works fine for people that it works for. You need to be making some decent money. You don't have to be rich, 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 but you should be making certainly more than you need to live on. Again, a corporation is a great vehicle to hold those assets in, and it's tax-free money. And it's funny because, again, being on the tax side of people's lives and on the investment side, the more successful people get, the bigger the problem we have to solve in their estate planning. And it's interesting, but it's everybody wants to grow more and more and more. But we got to deal with this at the end of the day too. So again, proper and financial investment structuring. Okay, there's three entities. Okay, there's three taxable entities. There's a person, there's a corporation, and there's a trust. Okay, those are your three entities that we file tax returns for and that we use in tax planning. Of those three entities, when we talk about real estate, okay, person, corporation, and trust, only a person and a corporation can own real estate. Okay, when you look at the land registry systems, all you'll find there are either people's names or corporations. A trust cannot own a property. A trust can hold a property for a corporation or a person. Okay, so that's very important to distinguish. In most cases, the whole key to a corporation is whether you can channel your income into that corporation. Another very, very important point with corporations, and especially when we're talking about real estate investments. Okay, keep it very simple. You own a rental property. Okay, very simple. We have gross rent, we have expenses, we have all the expenses relating to that property, mortgage interest, insurance, property taxes, and let's hope we have net rent. Okay, we call that net rent income. Okay, that net rent income has to land on a tax return. And I just said there's three tax returns. There's a personal tax return, a corporate tax return, and a trust tax return. Okay, so when we have net rent income, we have to decide where that net rent income is going to go. Is it going to go on a personal tax return? Is it going to go on a corporate tax return? Is it going to go on a trust tax return? Well, let's go backwards. A trust tax return, a trust that we set up in our lifetime is called an inter vivos trust. It pays tax at 50%. Okay, that's not good. We don't want the net rent income going into a trust. It pays tax at 50%. So that's off the charts. We're not doing that. Um, Corporations, okay, very important to understand. There are two types of income in a corporation. There is active income and there is passive income. Active income is taxed at 12%. We like that. 12%, I'll pay that all day long. Okay, passive income is taxed at 50%, 50. Okay, and because we're all real estate investors or want to be real estate investors, in the world of real estate, passive income comes from net rent income and mortgage interest. So if you have money, you lend it out in your corporation, you get interest, that's passive income taxed at 50%. If you have if the corporation owns the property, when we talk about net rent income, the first thing we do is, well, who owns the property? If the person owns the property, that net rent income is going to land on their personal tax return. If the corporation owns the property, that net rent income is going to land on the corporate tax return. Net rent income on a corporate tax return is passive income, taxed at 50%. That's no good. We don't want to do that. Okay, so what do we do? Okay, so one of the questions when we talk about real estate investments, and that relates to back to that list of different real estate opportunities, we have to look at the type of income it's generating and where we want it to be taxed or where we not want it to be taxed. And so again, we look at the ownership of the property. If the corporation owns the property, if we have net rent income, we have a 50% tax problem. How do we solve that problem? Well, we create a second corporation. We call that a real estate management company. Okay, and whatever that net rent income is in corporation number one, we're going to move that over to corporation two as rent management income. We're going to have corporation two manage corporations one. So then when we move that net rent income away from corporate one over to corporate two, that is rental management income. That is active income taxed at 12%. So that's how we solve that problem. What if the person owns the rental property? Okay, that net rent income is going to land on their personal tax return. Okay, remember what we said before. You're either in a 20%, 30%, 40%, or 50% bracket. So the question is, you own the property personally. What is your marginal tax bracket? Where is that net rent income going to go? If it's going to go at 20%, we're good. We're fine. If it's going to go at 30% or 40% or 50%, we have to do something. What do we do? Once again, we bring in a corporation, a real estate management corporation, to take that net rent income away from your personal tax return and convert it into real estate management income in the corporation. So we pay 12%. Okay, clear as mud? It's clear to me. Anyway, and the other thing that sometimes we do is bear trusts. Okay, what is a bare trust? A bare trust is simply that, let's just say I own a rental property, and but the bank won't give me any money if I try to put it in my corporation. That happens all the time. Andrea is a real estate agent. You can attest to that. These bankers are not much help when, no, no, you can't own that property in a corporation. You have to own it personally. So if we're stuck owning the property personally, we create what's called a bare trust agreement, which really means we're holding the property personally for our corporation. So all the accounting we do is in the corporation as far as the rent, the expenses. So that's what a bare trust agreement is. And for those of you following all the evil things that happen in the tax world by CRA, they are attacking these things. Okay. Bare trust agreements, we have to file trust documents. We never used to have to file trust documents for these things if there was no income in the bare trust agreement. It was just an agreement. Well, now they're making us file T3s, trust tax returns for all these bare trust agreements, which is just a pain in the you know what for us as accountants, but it's new rules as we have to do it. So anyway, so that's just stuff that you need to be aware of from a tax perspective. I'm going to just talk about a few other little things and then we'll open it up. Monthly, we do at the Canadian Investment Service, CIS is Canadian Investment Service. We do free monthly educational webinars. I'm a strong believer in giving back, and one of the ways we give back to the community is by literally just sharing a lot of financial tax investment information with people. We are really driven to have people better educated. The information we give people is not skewed towards selling something. It's directed towards you better understanding. We're giving you information, education, so you better understand this stuff. We're not trying to slant it in any way. So you're welcome to join if you want to participate in those things. Just go to my website, canadianinvestmentservices.com, click on CIS webinars, put in your email address, and you will get invites every month. We do it the last Thursday of every month. We're not doing it tomorrow night because we did one earlier, but last Thursday of every month. The next one will be at the end of April. So you're very welcome to join. And kind of in a summary, the way I've described how we provide investment services is the only way to ensure that the best interest of a client is put ahead of an advisor. Okay, if you're dealing with a licensed advisor, your best interests are not being looked after. So the way I've structured my investment company is really the only way that we can ensure that your best interests are put ahead of ours, which is the way it should be. So when I create this company like this, and when I work with real estate investors like Andrea, it's a good marriage, okay? Because now we can introduce the things that Andrea has to offer to people in a very safe environment. We're not selling nothing. We're just giving you information. Hey, if you're interested in something in the US, talk to Andrea. If you're not, don't. But if you're interested in any of these other real estate things that we're talking about, talk to Andrea, talk to me. Again, we try to become a very safe thing. So again, our little motto is CIS equals EIS. So CIS is Canadian Investment Services. EIS is education, information, and then IP selection, helping you select what investment product you want in your financial planning portfolios. Visit our website, canadianinvestmentservices.com. I mentioned the monthly webinars, the inner circle. There's some information on there if you want a more in depth. That's where we really go into a deeper dive in the financial planning. And to kind of summarize it up, given we're talking about real estate, all the wealthy people, most of the wealthy people have real estate. Okay, you look at these pension funds, these massive pension funds, CPP and teachers' pensions, OMERS, all these big pension funds, they're all hitting about 50% of their assets in real estate. And we're talking humongous billions of dollars in real estate. So all these wealthy people, all these pension funds, they're all investing in real estate. We've got this ridiculous investment management system in place in Canada, certainly in Ontario, where all they want you to do is invest in mutual funds. So it's a real, it's not something that's really favoring the client. On a mutual fund note, again, I'm not overly opposed to being invested in the stock market. Just understand, when we manage money, we're trying to protect your capital. We're trying to get you a rate of return. There's not a whole lot of protection of your capital in the stock market. In these mutual funds, they're just, I don't know what to say about them. When people are invested in mutual funds, those are they have the highest management fees. And what we do in our business model, again, we're not, when I meet a new client and if they have money in a mutual fund, I'm not just going to take it all out and put it in real estate. First of all, it's not my decision. It's up to the client what they want. If they're in mutual funds, maybe they want to be there. Okay, so I always say to them, well, look, you're paying probably 2.5, maybe even 3% management fee. There's two people that are making a lot of money in a mutual fund, and it's not the investor, it's the bank, and it's the fund manager. Okay. In a mutual fund, it's just a basket of stocks, and there's a fund manager that's actively buying and selling. And they get paid a lot of money. And 90% of the time, and this is historical, this is proven time and time again, 90% of the time, these extremely high paid fund managers do not outperform the stock market indexes. 90% of the time, these very high paid fund managers lose against the stock market indexes, the TSE 300, the Dow Jones, the S&P, all these different indexes on the stock market. Now, what relevance does that have to anything? Well, many years ago, people thought, well, why are we paying these high priced fund managers to lose 90% against the index? Why don't we just invest in the index? Whatever is in the index, why don't we invest in that? And that's what a robo-advisor does. Okay, so a robo-advisor simply mirrors what's in the index. So in the TSE 300, there are 300 stocks in there, all the big banks, all the big Canadian companies. So a robo-advisor simply just has those same 300 stocks in their, they use ETFs, exchange rate funds, in their robo fund. Wealthsimple is probably the most well-known robo-advisor. They've been around for a while, but now all these other little robo-advisors are popping up. So how we manage money at Canadian Investment Service, if I have a new client and their money is in mutual funds, the first thing we do is we go, well, you're paying 2.5, 3% there. The robo-advisor charges half a point. Okay, half a point is what they'll charge you to manage that money and make sure it mirrors the indexes. Okay, I'm not saying the robo-advisor is better than a mutual fund. Please don't misunderstand the message. You are saving management fees by going to the robo-advisor. Okay, so anytime, that's the first thing we do when I meet a new client, if they're in mutual funds, well, let's move you over to the robo-advisor. Let's save you some management fee. And then we start talking about real estate or other types of investments, gold, silver, real estate. Is that something you're interested in? But at least while we're talking to these new clients, they're not paying the ridiculous management fees to these banks, okay, that have created this horrible system that people get investment advice in, okay? So I don't know if that makes sense, but I think we're at the top of the hour. We were trying to keep this to an hour, which I think we did. I'm going to open it wide up, right up to questions. If anybody's got any questions, Andrea, if you want to add anything more on the real estate front, again, Andrea and I'm there to help her. Real estate investors need to raise capital. When we do these joint ventures, we want to invite people that might have an interest in participating in what we're doing to join us to attract capital. So I'm here to help Andrea if she has clients that are interested in having their money managed. I'm happy to manage the money for them. We would certainly earmark that towards any opportunities, real estate opportunities that Andrea might have that might be of interest to these investors. But at the same time, I think I'm providing a much better service to the investors that are at the banks, that are anywhere else, that are dealing with people with investment license, because you are not getting your best interest served when you're dealing with somebody with an investment license. move the money over to us. We'll manage it properly. We'll make it available to Andrea, people like Andrea who have real estate opportunities for you. Um, and that's it, 8 o'clock on the nose. So if you got questions, now is a good time.
Yeah,
Ask.
well done, Jerry. Thank you. So we have a question from Manny already, who's asking, actually two questions. Does your company help with people wanting to lend their money into properties in the US? That's the first question. And the second one is, and should you create a corp in Canada that lends to the American corp? Is that beneficial in terms of tax preservation?
Yeah, okay. So let's just in a general comment, and let's just make sure I answer the question. So when we invest into the States, okay, which is becoming very popular now. So there's a couple of ways we can do it. We can, we hear about these limited liability corps, LLCs, all these layers in the States, which certainly is an option, which is certainly probably advisable. But you as a Canadian, you can put your money down in the States. You don't need an LLC. You don't need all this stuff. You don't all these need layers of US complexities. A lot of the investments, the funds that we would invest into may have structured themselves as LLCs. You will need a tax identification number in the States. Um, Again, most of it really depends on how the investment is structured. I know there's what's the name? There's a REIT, a real estate income trust called Western Wealth. They actually create a Canadian entity, and that entity is investing in the States. So you, as an investor, are actually investing into a Canadian company, but all they're doing is investing in the States. So that's kind of an indirect way to invest in the States. A direct way would be to set up, again, it also depends. Are you just looking at a single investment in the States, or are you looking to be that person? You want 3, 4, 5, 6, 7, 10, 20 units in the States. The bigger you're building your model, the more you're going to need these structures and these legal structures. And all of these structures obviously add a layer of cost. So you have to make sure these costs, and we always do this on a cost benefit analysis. But we want to figure out what it costs to file. You got to file a U.S. tax return. There is no double taxation, by the way. Canada has a higher tax rate than the US. So if you are a non-resident investing into the US, any distributions, they'll have withholdings that get sent to the IRS. You have to file the US tax return. Whatever you pay in the States, you'll get as a credit in Canada. So there's a whole bunch of tax stuff that goes on when you invest in the States. But so we can handle all that stuff. But it just seems that there seems to be a lot more opportunity happening in the States. The Canadian, there's still opportunities in Canada, of course. But 5 to 10 years ago, whatever you bought went up. Okay. You didn't have to be a seasoned real estate investor to be successful. You just had to get out there and buy something because it went up. So, and then you get all these people thinking they're really smart because they're buying all these properties, they're making all this money, and they're like, oh, okay, well, I'm really smart. I'm making all this money. Then the market does a little hiccup, the interest rates go up, and we've seen a whole bunch of people build their portfolios on their deck of cards, and the deck of cards comes crashing down. So now today, this market, you need to be a good seasoned real estate investor, and you need to work with people who are. You need to work with Andrea. She knows what she's doing. Okay, so it's more important today to really continue to get educated. I mean, you got to invest in yourself. You either got to take courses, read books, hang out with people that know more than you do. You got to build your knowledge base. And you got to work with trusted people. Again, I'll repeat myself. We don't sell. We give information, we give education, but we can certainly access anything that you want if that's what you want. So very important, but there seems to be a lot more opportunities south of the border than there are north of the border, even though there's still opportunities here. It's just they're a little far-fetched. Now, let me just read that question again to make sure I even came close to answering it. I don't know if I did. Let's see what the question is. Can CIS help us with deal structures when it comes to large scales deal? 100%. Yes, that would be a private conversation, but we can help. Hopped on late. Does your company help with people wanting to lend their money into properties into USA? Well, Andrea is your source. So she's looking at stuff in the States. And so when you get involved in these type of projects, you're either going in as a lender or you're going in as equity partners. Okay. And again, that's your choice. Okay. Some of these structures will allow you to go in as a lender or an equity partner. Some will just allow you equity, so again, figure out what works for you. If you're a lender, you're just going to get an interest rate. If you're an equity partner, you're going to participate in the equity. I know some of the ones I set up, I have hybrid models where, hey, we'll pay you some interest, but you're also going to participate in some equity. You're not going to get 12% interest and equity. You're going to get 5% interest and equity. So again, uh, you know, get your information, figure out where you're comfortable investing in. So what else we got? Great, got to go. Okay, thank you. Nice, thanks for joining us. Anybody else have any questions or anything you want to ask Andrea? Any ask myself?
Yes, feel free to either unmute yourselves or put it in the chat box. We'd be happy to. We have a couple more minutes. Maybe we can answer questions here. And
Somebody's got to have a tax question. It's tax.
yes,
Come on, come on, come on. Somebody ask me a tax
I,
question. I'll feel way better.
okay.
All
And while
right.
we're waiting for someone to think up those questions,
What
just to say, if you're Kitchener
did
based,
I
if
do?
you're
What did I
Kitchener,
just do?
yeah, sorry, Jerry, I was just saying if anyone in this group that's attending tonight is Kitchener Waterloo based, we actually have our next event. It's going to be in person, so save the date and we'll send you more information. But that's on the 25th of April. It's a Thursday night. That's going to be basically looking at more deal analysis, more opportunities, and just deep diving into some of that that we're going to be looking at that night. So we've got some industry experts coming over, and I'll send you more information if you are Waterloo based or if you're nearby and you'd like to join us. So
I'll
everyone,
put my website over here if you
okay,
want. www.c.
okay.
What are you laughing about, Randy McDonald? I can see you chuckling over there.
We have another question, Jerry. This time it's from Erin. She says she's very new to real estate investing. I currently own my home, which I want to sell and make better decisions with real estate investing in the future. I would love to connect with both of you regarding some options and organization of my financial picture before I invest. I'm excited to invest, but scared. And this was very informative and overwhelming, but I will definitely join the monthly webinars. Yes, I understand, Erin. Thank you so much for that comment. Feel free to reach out to Jerry and myself, and we'll definitely help you get on that journey to being a successful real estate investor.
Yeah, thank you for that comment because that really is what Andrea and I are about. Okay. Again, we are a very safe source. We're not out there to sell you anything. We're there to make sure your money is properly managed, tax efficiently. And, Andrea has an abundance of real estate opportunities at different times. So, yeah, reach out to her, reach out to me. We are happy to help. So, anyway, is that it?
Yes, that's it for now. She says, thank you very much. Well, thank you for joining us, Erin, and everyone else on this group tonight. We will be doing more of these webinars going forward. So we'll definitely keep you posted. If you've got friends who are interested in joining and learning more about how to get started, especially, that's something we can definitely keep you in the loop for. Now, we would love some feedback. If you've got any topics that you'd like to have us cover on future webinars, feel free to shoot us a message or just send me an email and I'll definitely look into that because we're always looking for what is it you want to be educated on, and that will help us set up better webinars as well for everyone. So I guess that's it. Does anyone else have a question about taxes, about
Randy does, but I'm not going to answer. He wants to know when the Kiss band is playing, which is not going to happen. Little private joke there.
okay. All right. Well, thank you, everyone. I think this is it, Jerry. Thanks so much for
All
your
right,
time and
thanks.
all the
Yeah.
information there. Really appreciate it. And we hope to be doing more of these so we keep you informed as more updates happen in the real estate world, especially and tax world. Have a good night,
Oh,
everyone.
thanks
And thanks
everyone.
again.
Take care. Bye bye.
Take care. Bye for now.